Eric Muadith, Muadith.com, with U.S. market analysis for the weekend of March 5th and March 6th, 2016. Taking a look at markets here with about 10 minutes to go before the close of Friday's session. We can see that markets are up slightly, about 0.36 on the Dow, 0.22 on the NASDAQ, and about 0.36 on the S&P 500. Of course, we'll see how we close again with about 10 minutes to go. Let's take a look at the charts and see how they are shaping up. We begin by taking a look at monthly charts this week, because if we take a look at the NASDAQ monthly, we can see clearly that it is coming back and showing potential for holding at the 50 level. And as long as that's the case, then the market here is definitely looking like it is now showing signs of strong support and might potentially month to month be moving higher. In fact, if history is to repeat itself, we might even eventually have to take out recent highs. Now, this is the 3-year monthly chart. Take a look at a 25-year plus monthly chart. And as we've been discussing, every time the NASDAQ has held this line on the 50 and bounced on the 50 level on the monthly RSI, the markets were a good re-entry. Again, we bounced on the same 50 level, which was during this period here, for a nice re-entry back in the market. And right now we are seeing the market holding the 50 line on the RSI on the monthly, which suggests that month to month this is a good re-entry. So as long as the market is holding on the monthly charts above support line over the last 5-6 years, as long as it is bouncing on this line on the RSI, one can expect month to month for this market to continue moving higher. If we take a look at a 25-year plus monthly chart for the Dow also is showing support at its 50 RSI level. In fact, the Dow is showing a nice double bottom there, suggesting that month to month this could be where the market stops going down, and in fact eventually could easily, or I don't want to say easily, but could eventually potentially break out to new all-time highs. And I'll show you that on this chart. You can see here that the Dow held the 50 line with uniform action. In fact, it was double bottom support, and the market was an re-entry in the market there. Eventually we went to new highs. As you can see there, the market jumped to new highs. We held the 50 here in 2011, nice support at the 50 line for a re-entry there. Eventually, after many months, the market went to new highs. So if we are holding here on the monthly for the market, especially for the Dow here, double bottom support, this entry, if it holds, assuming it holds, it suggests that we should not be surprised that in the coming months eventually we grind our way higher and even tag new highs. Take a look at the Dow Transports, and the Dow Transports already were holding on this line here. This line has been instrumental. You can see all the major lows over the last 25 years have come on this line. Even here, the lows of 90, 94, 95, eventual double bottom support here for the lows there. We even held here for a multi-month move higher. Again, support here for a multi-month move higher. Here we had uniform activity before the green line and back above it. So once it moves back above the green line, that was a re-entry. We tagged that same level here in 2011 for the lows there, and now we are tagging that same line. So as long as markets are holding above support lines on the monthly, we have to assume month to month that the market has good enough energy to continue moving higher. If we take a look at the S&P 500, you can see here 1990 it held the 50 line for a re-entry there. It held above the 50 during the pullback of 94, 95 for the lows there. It came close, not quite, in 98, and here it held back above the 50 for a re-entry there. It bounced below and back above 50 for the re-entry there, and now we are back above 50. So if you did not have any other chart in the world to look at, this chart by itself, as long as the market is holding above the 50 line, suggests that month to month we are eventually gonna grind ourselves to higher levels. So month to month, that's what the market is trying to say for now. And of course here, if we eventually crack back below support lines, then we can go back to being bearish with the sentiment. But for now, as long as the monthly is holding, one can expect month to month that the market has stabilized, if not potentially looking to be moving higher in the coming weeks and months. If we take a look at the NASDAQ daily, we can see that short term seems to be some type of a resistance around current levels, and this goes back to the recent break at the beginning part of December. So once we broke through here in December, the market did pull back, and we had a relatively big drop after that pullback. So now we are coming back to test that sentiment, and we can draw a line from there. And it looks like right now, as the market ends the week, we are still coming and showing potential resistance around this current level. So this has been a problem. The market is closing here around current levels, and here we can see that as long as this is resistance, we might actually be looking for the next swing trade to be down based on this resistance. If we extend this line backwards, this red line, we can see that some of the major highs, for example, the ultimate high in the NASDAQ, came exactly on that red line. So this has been a problem for the market short term. Until such a time that we can clear this resistance, one can assume that around here one can look for a swing trade to the downside. If we take a look at the Dow Weekly, now that the market has closed, the market was up about 2.2% on the Dow. Now it becomes a little bit of a trick because we had a nice 2% gain for the week as the market moved above RSI 50. The problem is in the coming week, if we slide back below 50, expect pretty much to take away all these gains, probably for a reversal of about the same, if not more magnitude. The last time we had that type of action was during this period here in December. Markets had closed above 50 during the highs there, and then they coiled back down, and of course we know what happened at the beginning of this year. We had a big drop. So that is the risk, in my opinion, that yes, the market has had a nice gain. Keep in mind that over the last couple of weeks we had observed that the market had made a fresh weekly closing lows. While we were making fresh weekly closing lows, we saw an improvement in the RSI. That improvement has led to 3 weeks of back-to-back gains in the market. So maybe now we are due for a reversal of this nice move off the lows. In fact, if you take a look at a 5-year weekly chart for the Dow, you can see that you can make lots of arguments either way. You can see support on this line, which has been a great support area for the market since the lows of 2011. All these have been nice entries on this 5-year weekly chart. And recently we went back above it for this re-entry, and now double bottom here, support for this entry back here. So that has been a good indication of where the markets were going for now. Now if you want to change this, you'll see that right now we are coming back to a level of potential resistance, and it's a simple line going back to 2011, connecting recent weekly RSI lows. So if you draw it like that, something like that, it connects nicely with the lows here, the lows there, this low, and also it gives us this break point right there in July. Once we broke through there in July, you can see the market has been off those highs. We haven't been back there. So what we can do is extend the same line, and you can see that this has been a problem for the market. Every time we break through the red line, we drop. We broke through the red line again here in December for the highs there, and we dropped. So right now we did close slightly above the red line, and that's why I'm saying if we stall in the new week, that would suggest that would be the beginning of a fresh leg down. So just watch that. Anything that moves the market back below 50 on its weekly RSI might suggest that this here has become a problem for the market, and that now the next swing trade is down if this becomes confirmed resistance on a weekly chart. If we take a look at the Dow Transports have had 7 straight positive closes over the last 7 weeks. Okay, so that's a good move from the lows here to the current levels, 7 weeks. The last time we had a 7-week straight rally was from here to the actual highs there. So just keep that in mind. And I think now we are coming closer to potentially testing this move. We closed above 50, and if we stall just like we did here in November for the highs there, if we stall back below 50, then the next swing trade is gonna be to the downside. We can also see that there's some potential resistance if we take the highs on the weekly RSI and extend them out. It should be something like that. In essence, we are coming back and showing potential for recent RSI resistance. So I think around here we could easily stall. In fact, if you take a look at the break, let's go to a 5-year weekly for the Dow Transports. And you can see if we take the lows, we can see we broke down here in about April or May for the highs there. And since then, we can even draw a line around the 50 level, which has been a problem. And this has been a good tell for how markets were going to respond. Every time we stall and fail to hold the 50 level on the weekly RSI and also move back below the red line, we move lower. So there's a trap here, in my opinion, that the markets around here could stall. Keep in mind, we already drew a line of resistance on the top side after 7 positive weekly gains. One can assume that it makes sense for a pullback around here. Also, we see that becoming resistance or coming back to test the top side of the weekly chart. So personally, I would not be surprised that around here the market stalls. Take a look at the RSI here. If you take this line, this break line, and extend it, you can see sell signal here for that move, resistance and back below the red line for the highs there. And now this is becoming a backtest area. If the market cannot move above that red line, then obviously the next swing trade is down. Keep in mind, we are looking at monthly charts that suggest month to month the markets might be good, but now weekly charts are looking a little bit bearish, and so are daily charts. So maybe we are going to get a pullback within the larger construct of a market that eventually moves higher month to month. We shall see. If you take a look at the S&P 500 weekly, you can see that after the close of this past week, it is coming back to test the top side of its weekly RSI line. So S&P 500 needs to clear this resistance, otherwise the next swing trade is down. Also, if you take a look at price, there was a weekly closing low there in December, and that's at 2005.55. And you can see that once we broke through that, the market has not yet been able to move above that weekly closing low. Right now, we tried to trade above that, but we were rejected. So we can also watch that 2005.55 level for some type of gauge as to how markets are going to respond. If we take a look at the daily for the S&P 500, just like the Dow, somewhere around here has been where it has been struggling. You can see rejection here for the highs there. Eventually we came close for those highs. We broke through here, and that also coincided with coming off the highs of November. Came close in December here, and now we are back to this level. So if the market can hold above that red line, that's good for the bulls. Otherwise, if we call down and show another instant of rejection here, then potentially the next swing trade is down. We take a look at the hourly for the SPX, and we can see that yes, we've been making nice incremental highs in price, but the RSI pretty much has stayed around the same level, as you can see. So I'm not sure that this is actually showing that the market is poised to go higher, because really we are still trading sideways on the RSI while the prices are showing some type of improvement. So I think this could also be looked upon as being negative divergence, suggesting that net we shouldn't be too surprised that the market next has some type of a swing trade to the downside. Now keep in mind that if we go back to the monthly, the key is whether the markets can continue holding this line of support on the 50 level. So the 50 level on the monthly for the S&P 500, as long as markets are bouncing on this line, this is very strong action for the bulls, which means the bulls have the control of the market month to month. Otherwise, if the bears want to take the market back and push markets lower, they need to break through to fresh 3-year lows. Eric Mwadhe, Mwadhe.com. As always, good luck, peace, and blessings. EACS.